Digant Haria has been thinking about it also, right? घर कब जाएगा? ऑफिस में ही घर बना लेते हैं छोटा
घर
सा.
में ही ऑफिस बना लेते हैं. I would say the other thing.
Yeah, that's a wiser one, Nikunj.
Imagine what will happen.
I don't know much. See, life for us will really become longer in terms of working hours. But yeah, I think these are things which are beyond our or my control. So I just think that go and invest in the biggest gaming company of India, which is the National Stock Exchange. It's unlisted right now, but someday it will list. I think, see, the whole, if you look at the foreign markets and the foreign exchanges, I think the trading hours there are quite high, quite long, and we'll eventually go there because, as you exhaust the revenue drivers, see, like earlier we just had a monthly expiry. Now we have weekly, and, within week, every day there is some other expiry. So I think these are measures which the exchange will eventually take to earn the revenue. And I think government is happy because it makes the STT, it makes the GST, and in all kinds of gaming activity, it's the government who makes the most money. So, government also implicitly supports a lot of these measures. So I think, yeah, we don't have much, someday it will happen. I hope it happens later than earlier.
I want to go back to that point which we've been again and again factoring out is that 9 out of 10 trades at the retail level in the options market are loss making, and we've seen a bulge up in the options market. Something which the regulator and everybody has raised concerns about, that how the retail is actually losing money in the options market. More extended hours only means that there is going to be more activity. Very simple. Very, very simple. Meanwhile, RBI has given a nod for issuance of co-branded credit card for Ponawalla FinCorp. It is exactly moving in the right direction. The Punawalla Group acquired an existing NBFC, rebranded it, capitalized it, and now they are expanding it in terms of where they want to take the reach and they want to take size. Digant, you track this space very closely, and Punawalla FinCorp, everybody is saying, excuse me, is the dark horse. What Bajaj Finance did, let's say, in last decade, Punawalla FinCorp could do in this current decade. Is that true? Do you think there is possibility in thinking like that?
I think, see, last decade, Bajaj Finance's stock was up almost 40 times. I think Punawalla FinCorp did that in 2 years. Like, Magma was $20 when Punawalla FinCorp came in. Today it's 400. So the stock has done the same thing what Bajaj Finance has done. But unfortunately, on the business side, I think Poonawalla is very, very, very far away from, like doing anything close to Bajaj Finance. They just say that they have all the products and they're trying to be like Bajaj Finance, but they are still more like Magma and less like, Magma was the older avatar of Poonawalla. And very much, not like Bajaj Finance. See, building Bajaj Finance is not like a 2-year process. It's a 12-year process. And that too, Bajaj Finance did it when competition was low. They got 6 years to do their consumer durable finance and personal loan cross-sell. I think Poonawalla is in for a lot of competition. And I did not like, especially when they sold off their housing finance company. If you look at Bajaj Finance today, roughly 25-30% of their AUM is a comes out of the housing finance subsidiary. And Punawalla FinCorp just went away and sold the housing finance piece. So I just think that, I really don't know about the long-term intent of Poonawallas in this company because it's, the actions don't really say that they are in for a very long term in this particular game. So investors should really not think of this is the next Bajaj Finance. On the business side, it's hardly Bajaj.
So is Bajaj Finance the new Bajaj Finance and will continue to be so, Digant, especially after the fundraise announcement?
Absolutely, Aisha. I think it's always, we say that the next HDFC is HDFC, and similarly, the next Bajaj Finance is Bajaj Finance. Obviously, we cannot expect an encore of the last decade in terms of stock price CAGR. But see, now it's almost 2 years that Bajaj Finance stock has done nothing. Like in the last, it hit like $7,500 in September 21. We are sitting in September 23. So 2 years of consolidation has happened, and in those 2 years, I think Bajaj Finance has at least got its online piece right. It was always the champion of the physical world, personal loans and the buy now, pay later kind of loans. But in the offline world, it was far behind. I think in the online world, they have caught up. So as I see Bajaj Finance today, they are like, a mix of everything, the old world, the new world, the physical, the digital, and all of these things. So I think now at least we can expect compounding from this stock. Earlier, we've already seen 2 years of consolidation. So I think that, my neutralish view on Bajaj Finance is now coming to an end, and we can at least see compounding in this stock going forward.
Okay. Meantime, wanted to also get in your take then, Digant, on Reliance Industries. Of course, you have seen that underperformance vis-a-vis what the index has done. But do you believe that if we were to add the value of Geo Financial, that you wouldn't really be able to characterize this as actual underperformance? Your take?
See, I think the underperformance of Reliance should continue. Especially the excitement around Geo Financial is quite unwarranted because, Geo Financial, all said and done, I think we discussed this on the show that to reach a profitability of, say, 10,000 crores, for a Reliance, nothing less than 10,000 crores of profits becomes a meaningful number. I think they have to build a 3 lakh crore loan book, and which is at least 5 to 7 years away. And I think Reliance this time knows that we should not rush into the lending business. The Geo Financial guys, the CEO of that company has a lot of experience in developed market consumer financing. So I think they are going to take it slow and steady. It is us, the investing community, which is getting more excited. I think they have a strategy of slow and steady. So I think that Geo Financial will add value, but very, very gradually. It's already very richly valued right now, as far as I can make out. So I think that because of Geo Financial, the Reliance, impacting Reliance is very, very far short. I think it's more to do with how the retail business of Reliance turns around. That is going to drive the bigger part of the stock.
Okay. I'm just going to, mark a few things in terms of where the market is moving, in terms of where the setup is, and we've seen a time-wise and a price-wise correction which has kicked in defense and railways. Again, everybody likes to own the stocks which are outperforming, and defense and railways is where the real sweet action is. Some of these stocks have hit a pause button. So on a decline, what would you be looking at buying?
Okay. So Nikunj, I think that, let's see, this whole PSU rally started with the PSU banks, and then it broadened into defense, railways, and finally the whole power utility space. I think we are just now seeing that the defense and the railway part has paused. I think PSU banks should take forward the PSU rally, and even some stocks like, say, Coal India, MOIL, the resources intensive stock, because they benefit out of this inflation. So they may actually start doing well. But very specifically, between the railway stocks and the defense stocks, what we like, I think the railway stocks really have a lot of steam. So do defense, but I think the rally is far ahead of what the numbers delivery would be. Wait for some cool off, and something like a Titagarh definitely should be in the radar, and any good amount of price decline, they can be used by long-term investors who missed out the earlier leg of the rally.
That's the delivery data in some of the PSU banks. Digant, should one avoid smaller PSU banks? They don't have size, they don't have reach, they don't have NIMs, they are going up. And now the free float, they're trading actually more than the free float in some cases.
Yeah, absolutely, Nikunj. Even that free float is the game here. So if you look at these smaller ones, the Central Bank of India, IOB, UCO Bank, IDBI Bank, I think the free float is only 3%. So we all know, how easy it is to push or to charge up a stock which has just 3% free float. So I think it is definitely that game. When we look at business capabilities of a PSU bank, there are two things which anyone can look at and decide. See, one is the CASA ratio, and second is how good are they at lending to the retail and the SME segment. Because retail and SME lending requires a lot of capability. Most of the PSU banks, the smaller ones, are only doing say industrial or corporate loans and agri loans. So they really don't have the capabilities. So I think one should really be away from these smaller PSU banks. But I think the larger and the more strategic PSU banks, something like a Canara or a Union or a Bank of Baroda, I think they still offer a lot of a lot of juice to the investors. So I think anybody serious about the PSU banking space, the serious business upside is in these larger ones rather than the smaller ones.
Digant, also curious to know about the primary market action, right? The amount of paper that's been hitting almost on a daily basis. I mean, even as we speak, you've got Nuvama Wealth, which is going to be listing today. You've got the JSW Infra IPO currently on, Updata Services IPO as well soon. Anything that's interested you of late?
Oh, I think it's so difficult to keep a pace of what's happening in the primary space, because every day something or the new, something or the other keeps coming up. So I just think that IPOs generally we have tried to keep away, because the allotment itself is a problem. You hardly get anything. Plus they already list at very large premiums. But amongst the recent ones that you mentioned, I think Nuvama Wealth certainly deserves a look, because wealth management as a space is really expanding. And the good part about wealth management is it is agnostic to products. Like, a broking product can slow down, an FNO product can slow down, mutual funds can slow down, insurance can slow down. But every time there's some product which keeps doing well. And I think wealth management companies can actually navigate this whole cyclicality within products very well. And we have seen that how IIFL Wealth has, really scaled up well. You look at companies like ICICI Securities, HDFC Securities, they are also saying that we want to enter into the wealth management space and, become like the affluent class wealth management companies. So I think wealth management is really the future, and Nuvama Wealth is something which I'll keep a close eye on.
Digant, I look at MCX and I say, okay, this is almost like a monopoly business. It's an exchange. NCDX is not large. Commodity prices are going higher. Indians are going to be trading more in commodities. A, need-based, and B, also in terms of speculation. But MCX as a stock, frankly, has not lived up to its expectations.
Absolutely, because I think you made a very nice statement that Indians are going to trade more on MCX, whether it is for need or whether it is for trading, or just sort of this. So MCX really did not do a great job in terms of the original mandate of allowing the commodity users to hedge their product. Okay, because a lot of people still find it more easier to hedge their gold and other commodities on the London Metal Exchange, via Dubai or, via some other route. So I think MCX really suffered because it did not do its core job well. But somewhere in 2019, they launched a lot of these commodity options, and commodity options has really picked up. Like if you look at, the revenue pool or the trading volumes which come out of options, I think we are seeing a similar bull market in commodity options as well. The ones that we are also seeing in our own equity markets. So I think that has really changed the game for MCX. I think it is just waiting for this, the software part of MCX to get resolved. And then I think, yeah, it really makes, as Nuresh also said, it's set up for a new lifetime high. I think once the software issue is resolved, which probably October 1st will give us the first glimpse of that, I think we are set for, much longer journey here. And Nikunj, as we discussed just earlier, that Indians like anything which has an element of gaming, whether it is Delta Corp or whether it is a gaming company or whether it is a stock market, right? We see that 99% of India's volumes come out of FNO. So Indians like this whole, the gaming part of investing.
Final question, Digant. In last 3 months, how have you adjusted your portfolio? Where have you used strength to your advantage to lock some gains? And where have you added more positions?
So I think that the whole capital goods, industrial, and railways, these three themes, these are the pockets where we have taken some money off the table. We are not negative on this space, but we just feel that the stocks have run up a little faster than what the fundamentals have helped. So we've taken some money off of this space. The companies which are in electricity and pumps and motors and compressors, all these industrial parts. We've taken off some money there, and we have adjusted that into public sector banks and into the resources companies. The companies who own the mines and who do the mining, something like Coal India or a MOIL or an NMDC. So I think this is one trade that we feel should hopefully play out in the next 6 months.
Okay, bunch of other stocks which were pretty active yesterday. A, of course, Karnataka Bank, after looking at equity issuance of about almost 1,500 odd crore rupees. There was, of course, Delta Corp as well, which has got a fresh intimation for payment for, alleged tax liability, which equates to about more than 11,000 odd crore rupees for GST. And, this I wanted to talk about, Digant, because, yesterday I think in the bulk deal notification, another HNI investor sold 3% equity. I mean, is it story over for some of these gaming companies for now at least, till there is regulatory clarity?
Yeah, I see. We never, we have one rule: we should never fight the government in investing. And I think government is trying to maximize its tax revenue out of these gaming companies. It's an evolving thing because gaming itself is not a very very old sector in India. So I think somewhere in the next 12, 18 months there will be some negotiations and some common ground that will be reached. I think that is a time I look at it. It's no point jumping into a sector where government is coming out with one or the other notifications every 3 months. While as I said, we are very bullish on gaming as a sector because Indians really have a large appetite for low cost entertainment. Be it playing rummy online, or be it watching IPL, or betting on cricket, or be it option trading. We have seen that Indians really like this particular thing. So we are very bullish on the long-term story. But I think there is no point fighting the government. Let the regulations get clear. Let the whole GST rules around this gaming, let there be more clarity, and then one can revisit because these are very very long-term stories otherwise.
Okay, Digant, great to have you on the show. Thanks as always for taking the time out and joining in.